What's up, guys? Philip at Trade Genius. Important update today because we broke through a very technical level and trend line. So I wanted to discuss that. Before we do, real quick, guys, just want to remind you, running our summer specials, the crypto room, the crypto signals, indicators, chat rooms, $2.99. That is a killer deal, and summer special #1. So no coupon code needed. That's just for a limited time. We got a day left on that, just about. So wanted to remind you guys of that. All right, let's get into today's charts.
Trade Genius.
Okay, gang, so we were talking about the level of this trend line headed down, right? And we also had some bearish technical levels above us. And there's just really a large amount of selling that's coming in here. And what I think is probably going to play out now that we've seen continued move higher is, for me, this was the level I wanted to see a reaction on. Now, I thought we would probably see a likelihood of a pullback. I wasn't sure if we'd get all the way down to here just because that was such an obvious level, but we really didn't. We consolidated and then busted higher. The reason why we've had such a solid move higher was, remember, the last video I said we need a daily close above this high of 76.87, and we got that. And I think once we saw that, I think that was a lot of technical confirmation for a lot of traders that this is a bullish confirmation, right? So then as price moved higher, shorts had to capitulate, cover, and you got another big daily candle higher. Also remember, when you get these big daily candles, they typically will spawn off a longer trend of higher highs, as you saw back here. So that's a key thing to keep in mind. So what I'm looking at here now, since this trend line's been broken, eventually we're going to probably come back and test this. Okay, so just be aware that that's a high likelihood. But at this point, what ends up happening is when you start getting into proximity of the 200-day moving average, it starts to become a self-fulfilling prophecy. So we're going to probably run up here and get really close, if not tag this level here. So I would say if you're long and you're looking to take some profits off the table, then you're looking at this 8,500 up to this almost 8,700 level. But I would expect at that point, high likelihood, this is going to act as a resistance, and you're going to see some shorting come in. And that's where this move back down is going to be interesting, and people are going to be looking to get long again. And that's where, we'll have to take a look at the volume and things like that, and our indicators, our oscillators, to kind of pinpoint what level would look the most enticing to get long. At this point, this level is kind of like secondary, whereas the retest of this trend line down would probably be more appetizing. So we're the 6,800 level of support is less likely to bounce off of or get tagged, I should say, as opposed to, say, now the 7,500 to 7,600 area for another final move higher, third move higher. And notice on these last moves what happens. You get one thrust here and then a second thrust here. Okay, and the pullbacks may not pull back very far. They may consolidate. This one had a nice little dip back. And then you get one final thrust higher high. That's 3. But notice on the third one where your RSI is. So you've got RSI on the first move. RSI is making a higher high on the second move, right? But then on the third move, what happens? Your RSI starts to go down. So, and you're making a new high. That's called, when you have that situation, a bearish divergence. So that's kind of what I think will happen here. What'll be interesting, though, is to see if we can break the 200-day moving average, because as you can see here, we had a rising 200-day moving average. So when we ran into it, there was room for another higher high. Whereas this one, if we run into it here, then we're going to have to actually break it, which is bullish, but then have a bearish divergence to roll back over. So I don't think this move is going to roll over very hard until we get a daily bearish divergence like on the RSI. And so I think we have a consolidation and then another thrust higher, at least one more. So the immediate term, if we look at the 4-hour chart, actually, if you look at the 8-hour chart, we could fit more information in here. You're going to see that it's just been eating through all these levels of resistance. This resistance zone was a key level, actually, that the price has reacted to, either busted through it or busted below it, and price respected this area. And I think that fueled a lot of what you just saw in the last few hours, because all those shorts that were heavily short in here just got blown out. So now what we're seeing is just more buyers and sellers, guys. That's all it is. But, you know, when you have, obviously, stops got ran, and now we're up into another level. I have this line here. This line was already drawn at about 8,200. But if I drill down to the hourly chart, and this is where I'm looking at, you know, this was consolidating into a pennant, and this is now breaking back up. This is just looking really bullish here, and volume is elevated relative to what you kind of see during the resting periods. So this is a pretty decent uptick in activity. So looking bullish here, and I think that we will have a decent pullback, but we're just not going to see that right now. And I think that you really need to be cognizant of this 200-day moving average, because price gets near it, you know, similar to like what we had here, right? And price gets near it, and then what happens? Kind of just sucks up to it. So if you're swinging on this and you want to look at another next shorting opportunity, it's definitely going to be in this area here. But fundamentally, this has changed. This is now, if you scroll out, we're looking at this chart. Now you've broken the long-term down trend line. So, and you know, a lot of this is going to be institutional inflows are going to be greater than they have been. You know, last year when things were running up here, we had the futures, and we had the promise of the futures bringing in more institutional money. And so obviously this thing got way ahead of itself, right? We've talked about that a number of times. But the thing that hasn't really flowed into the market in a large quantity is the institutional inflows. But, you know, Coinbase, they announced that their custodian service was up and running. You know, that was back in this area here. And now all of a sudden, and I'll put that on a chart exactly when that was, but you know, all of a sudden now we're starting to see the rise again. Now, so I think it's a combination of custodianship, which takes care of a lot of the issues that institutional investors and funds had. They didn't want to be having to deal with the technical side of a secure wallet. And you have the ETF. So the promise of the ETF is going to drive this thing higher. And I'm starting to get convinced now we'll probably have a trend up for a while as we get closer to that ETF announcement date. Again, this would be a classic buy the rumor, sell the news. You'll see probably a lot of retail guys try to FOMO in when the news breaks if it is positive and they do approve it, which seems to be pretty likely at this point. And then it's going to roll over and guys are going to be like, what happened? But that's just going to be profit taking from the smart money. So just keep that in mind. It might be a pretty spastic candle on the day of the announcement, but I would expect a pullback actually, and then before resuming the trend higher. But anyway, I just thought this is major trend line that's been reversed here. This is a trend reversal in Bitcoin, and like I said, probably looking at this 200-day moving average to get within $100 plus or minus of that level there at 86.64, and that would probably be the next area where we may see some resistance and getting short. But it starts to get interesting from here, guys, because if we look at the overall volume and we look at our volume profile, you know, you've got a lot of accumulation. This is why I said this 11,700 level is key. We failed it. We had a double failure here, and that rolled over, and we've had a lot of double failures since then. And so now we didn't have a double failure here. Like 6 months ago, this level here that we just broke through would have rolled over again. And so that's a big change of character. But once we get above that 11,700 level, that's where volume hasn't really accumulated a lot. So you could see a very quick move from there up to 14,000. And then, like I said, there's just not a lot of price history beyond that. So that's part of the issue when you have a limited supply on a commodity like Bitcoin, that you can start seeing some really fast price movement because that supply has to come somewhere, and there's just not a lot of it. And when you're trading Bitcoin for a long time, you'll know that we used to have sell walls that were thousands of Bitcoin. Now we have sell walls that are hundreds of Bitcoin. And that's going to continue to trend down. You'll have sell walls that are tens of Bitcoin. And that's just, again, it's just a unique characteristic of a product like this, where you know there's a finite amount and you know exactly more or less how much there is out there. So, all right, guys, well, that's pretty much it for this video. Appreciate you guys watching it. Please hit like and subscribe, and I will see you on tomorrow's video. Take care, guys. Bye.
Trade Genius.